Now, it is too soon to tell, but March the 9th, 2009, may turn out to be the event that investors spent a year and a half trying to get right, the bottom of the market. It was on that date, exactly 3 months ago, when stocks fell to multi-year lows. A furious rally followed that turned some of the biggest losers into the biggest winners. Energy shares, emerging markets, and the banks. For some perspective, here's Bloomberg stocks editor Richard Frost for more on that. Richard, very good day to you. Took a lot of people by surprise. A lot of people were shorting the market back in March, lost their shirts. So, follow the money. What have been the themes?
That's right. It certainly did take a lot of people by surprise. In fact, a fund manager told us a couple of weeks ago that this is one of the most detested rallies of all time because so few people were positioned for it. I mean, the themes we've had behind it have been, on one hand, signs that banks were finally making a profit in the first quarter. That's what drove the initial rally off that low back in March 9th. And also, of course, with the rise in commodity prices in the last quarter, on signs that the global economy may be starting to recover because of such huge amounts of stimulus by governments all around the world. That's boosted oil producers, metal producers such as Jiangxi Copper and other stocks like that.
You know, the problem with this is that earnings haven't necessarily kept pace with stock prices. The cheap PEs we were seeing in March no longer look anything alike. What are the technicals telling you?
That's right, Paul. I mean, if you look at Hong Kong, for example, the Hang Seng there is trading at 16.9 times earnings. So that's the highest since December 2007. So it shows how far stocks have travelled just in the past 3 months. Hang Seng up 61% in that time. At the same time, there's while earnings, obviously price earnings are getting much more expensive, that's not necessarily a cue for investors to sell. We've seen a huge amount of inflows coming into the market, again with a lot of people who missed out on that initial rally trying to chase the money. And so until we see those inflows starting to recede considerably, there could well be more upside for this market. Of course, at the same time, everyone's watching very closely what happens with economic indicators, particularly in the US and in China. We have several significant bits of data coming out this week, including exports and fixed asset investment.
OK, Richard, thank you very much indeed for that. That is Richard Frost in our Hong Kong Newsroom.